Welcome to Morningstar. I'm Holly Black. With me is Austin Fori. He's manager of the JP Morgan Emerging Markets Trust. Hello.
Morning, Holly, and thanks for the opportunity to talk.
So do you want to tell us briefly what the Trust does?
So the Trust invests in emerging market equities. I mean, it's very simple. We've been doing that now for almost 30 years, and we have a wide range of investments from Latin America right around the world to China and other parts of Asia. We are very bottom-up, we're very long-term as investors, and that's our proposition to shareholders.
So it's been a bit of a turbulent year, and I think that has been particularly seen in emerging markets. What are you seeing across the region in terms of winners and losers?
So you're right. I mean, it's been a very strange year, and some countries have done very well through this pandemic. I think if you'd said to us in February that China will be one of the world's best performing equity markets by now, we'd have been pretty surprised, but that turned out to be the case. Latin America, other parts of the world have had a much tougher time. And there have also been very big winners and losers at an industry level. So you've seen some businesses really accelerated by the pandemic, things like e-commerce, obviously, which we're all experiencing. And you've seen others, transport, energy, things like that, really struggling because of falls in demand. So big divergences in underlying performance of shares and industries.
What do you see as the biggest risks for investing in emerging markets at the moment?
I mean, I think that they are no different really to risks that you see elsewhere in the world. I mean, clearly some countries will struggle with economic growth coming out of the pandemic. Others, I think, will continue to see higher rates of growth than the developed world. We're really bottom-up stock investors, so we really concentrate not so much on macroeconomics, but on companies. And there, I think there are always going to be lots of opportunities, lots of winners and lots of losers as well. But actually, as an active stock picker, that's really what you want. We don't tend to pay so much attention, frankly, to things like politics, trade wars. It's interesting to us that the Trust, as of yesterday, was pretty much at an all-time high in terms of both net asset value and share price. And that's in spite of all the trade tensions, the US-China stuff. It's in spite of the pandemic. So if you can find businesses which can create value, you can still make money for your clients.
So you don't pay attention to politics and trade wars, but I know one thing you do pay attention to are ESG factors. So how do you think about that in your investments and in emerging markets generally?
Yeah, that's a great question. I mean, I think we've always taken a lot of notice of governance because you couldn't always take it for granted. So for the longest time, it mattered to us to understand who runs businesses, who controls them, and do they care about shareholder outcomes for people like ourselves. But that's the first point. We've always done that. The second thing I think is to say that we have a natural bias towards capital light and probably carbon light industries as well. So if you look at the Trust's carbon footprint as you measure it by MSCI, it's only something like 4% of what you would get if you simply bought the index in a blind way. So we have a very small carbon footprint compared to any kind of general asset class exposure. The last thing we've done more recently is to build a research framework around the most material issues. And that's really helped us, first of all, put ESG considerations right at the center of the way our analysts around the world think. And secondly, it gives us a terrific framework for dialogue and engagement with businesses. And that's something we're doing on a weekly basis, really, going to companies and say, this is where we think you're strong, this is where we think you're weak, and this is what you could do to improve. And I think that's a big part of what responsible investing should be about.
And you say you try to keep a low carbon footprint in the portfolio. Is that quite hard? Does that mean screening out a lot of companies? Because, a lot of emerging market countries are quite commodity heavy.
Well, we don't explicitly build it into our research framework, but it's a very natural outcome of the kind of things we're looking for. So, we don't like very capital intensive businesses simply because they tend to generate lower returns on capital because they need a lot of capital. So we don't have a lot of investments in areas like commodities. We certainly don't own things like coal mines. We don't own utilities and power producers. So it's really a natural outcome of our existing investment biases and the kind of things we're looking for.
Austin, thank you so much for your time. For Morningstar, I'm Holly Black.